Looking back, I can still remember the exact moment I placed my first trade. My hands were actually shaking as I clicked that buy button. I had spent 3 months studying charts, watching YouTube videos, reading books, and I genuinely believed I was ready. That single trade taught me more about my own psychology than any book ever could. What I'm about to share with you isn't some highlight reel of wins or a carefully curated success story. This is the raw, unfiltered truth about what really happens when you dedicate years to figuring out how financial markets actually work. The biggest lie I believed when I started was that trading was about being right. I thought successful traders had some secret formula that let them predict market movements with incredible accuracy. I imagined myself becoming this person who could look at a chart and just know where the price was going next. Reality hit me hard and fast. My first month of trading, I was right about market direction maybe 60% of the time, but I still managed to lose money. That's when the confusion really set in. How could I be right more often than I was wrong and still end up in the red? The answer was painfully simple, though it took me almost a year to truly understand it. I was letting my losing trades run way too long, while taking profits on my winners far too early. I'd be up $50 on a trade and immediately want to lock it in, terrified that the profit would disappear. But when a trade went against me by $50, I'd tell myself it was just temporary, that the market would turn around, that I just needed to be patient. This is the exact opposite of what actually works. Successful trading isn't about being right more often. It's about making more money when you're right than you lose when you're wrong. My second major mistake was treating trading like gambling. I'd see a setup that looked promising and just jump in without any real plan. Where was my stop loss going to be? I'd figure it out later. What was my profit target? I'd just see how it goes. How much of my account was I risking? Whatever felt right in the moment. This approach destroyed my first trading account. Not in some dramatic single-day blow-up, but through a slow, grinding series of losses that felt manageable individually, but added up to something catastrophic over time. The moment things started changing for me was when I finally accepted that I needed a system. Not someone else's system that I bought or copied, but a framework that made sense to me personally and that I could follow consistently. I spent 2 full months just watching markets without placing a single trade. I'd identify setups that looked interesting, mark where I would have entered, where I would have placed my stop loss, and where I would have taken profit. Then I'd watch what happened. This process was boring. There were days when I desperately wanted to just place a real trade, to feel that rush of having money on the line. But forcing myself to stay in observation mode was one of the best decisions I ever made. What I discovered during those 2 months completely changed my perspective. Most of the setups that looked amazing in the moment didn't actually work out, but there were specific patterns that showed up repeatedly and had a genuine edge. These weren't complicated patterns that required advanced technical analysis or expensive indicators. They were simple, clear situations where the odds were genuinely in my favor. The hard part wasn't finding these setups. The hard part was having the discipline to only trade these setups and ignore everything else. Risk management is something everyone talks about, but very few traders actually implement properly. I definitely didn't get it at first. I knew I was supposed to use stop losses, but I'd set them so tight that normal market noise would trigger them constantly. Or I'd set them so wide that a single losing trade could wipe out a huge chunk of my account. Finding the right balance took time and a lot of trial and error. Eventually, I landed on never risking more than 1% of my total account on any single trade. This rule felt frustrating at first because it meant my position sizes were smaller than I wanted. But this one rule is probably the main reason I'm still trading today. 1% might not sound like much, but the mathematics of it are powerful. If you risk 1% per trade, you can be wrong 30 times in a row and still have 70% of your account left. That's enough runway to get back on track, to figure out what's not working, to adjust your approach. When I was risking 5 or 10% per trade, 3 or 4 losses in a row would send me into panic mode. I'd start making desperate trades trying to recover the losses, which only made things worse. Proper risk management isn't just about protecting your money. It's about protecting your psychology. Overtrading was another trap I fell into hard. There were weeks where I'd place 30 or 40 trades, constantly jumping in and out of positions, convinced that more activity meant more opportunity. The transaction costs alone were eating into my returns, but beyond that, I was exhausting myself mentally. Trading requires focus and emotional energy, and I was burning through both at an unsustainable rate. When I finally tracked my results carefully, I realized that my best month had only 12 trades in it. Those 12 trades were setups that met all my criteria, that I entered with confidence, and that I managed properly. My worst months were always the ones where I was most active. Learning to be patient and selective was genuinely difficult. Markets are designed to make you want to act constantly. Prices are always moving, news is always breaking, there's always something that looks like it might be an opportunity. Sitting on your hands while potentially good setups pass by creates this fear of missing out that's almost physical. But I had to accept that my edge wasn't in taking every possible trade. My edge was in taking only the highest quality setups and executing them well. The emotional side of trading is something you can't fully prepare for until you're actually doing it with real money. I felt the rush of a winning streak that made me feel invincible, like I had finally cracked the code and everything was going to be easy from here. I've also felt the crushing weight of losses that made me question whether I should just quit and do something else with my time and money. Both of these emotional extremes are dangerous. The high makes you overconfident and reckless. The low makes you timid and indecisive. What helped me manage these emotions was keeping a detailed trading journal. Not just recording my trades, but writing about how I felt before, during, and after each one. This revealed patterns I never would have noticed otherwise. I discovered that my worst trades almost always happened when I was feeling bored or frustrated. The best trades happened when I was calm and patient, when I had done my analysis ahead of time and was simply waiting for my setup to appear. Once I saw these patterns clearly, I could start to interrupt them. When I noticed myself feeling that boredom or frustration, I'd close my trading platform and walk away. There was a specific 3-month period where everything came together for me. I had my system refined, I was managing risk properly, I was being selective about my setups, and I was keeping my emotions in check. Those 3 months were profitable, but more importantly, they felt sustainable. I wasn't stressed out all the time. I wasn't checking my positions every 5 minutes. I was following my plan and letting the results take care of themselves. This is what consistency actually feels like, and it's very different from the chaotic experience I had for most of my early trading years. But then I made another classic mistake. I got overconfident and started increasing my position sizes too quickly. A few winning trades with larger positions made me feel like I was ready to scale up aggressively. Within a month, I had given back a big chunk of those gains. This taught me that growing a trading account isn't about suddenly taking much bigger risks. It's about staying consistent with your process and letting compound growth do the work over time. When you risk the same percentage on each trade but your account is growing, your dollar risk naturally increases. That's the right way to scale. The wins that meant the most to me weren't necessarily the biggest ones in dollar terms. They were the trades where I followed my plan perfectly, where I managed the position exactly as I should have, where I cut losses quickly when I was wrong and let profits run when I was right. These trades proved to me that I had actually developed real skill, not just gotten lucky. Anyone can make money on a random trade when the market moves in their favor. Consistently executing your strategy regardless of outcome is what separates serious traders from gamblers. I also learned that not every market environment suits every strategy. There were periods where my approach simply didn't work well because the market character had changed. Accepting this instead of fighting it was hard. My ego wanted to believe that my system should work all the time, but markets go through different phases. Sometimes they trend strongly. Sometimes they chop around in ranges. Sometimes volatility is high. Sometimes it's low. Being able to recognize when conditions don't favor your approach and either adapting or stepping aside entirely is crucial. The community aspect of trading is something I underestimated. For my first couple of years, I was completely isolated, figuring everything out on my own. Eventually, I started connecting with other traders, not to copy their strategies, but to share experiences and learn from each other's mistakes. Hearing other people talk about the same psychological battles I was facing made me realize I wasn't alone in struggling with these issues. It also exposed me to different perspectives and approaches that helped me refine my own thinking. Looking back at 6 years of this journey, the biggest realization is that trading isn't really about markets at all. It's about self-mastery. The charts and indicators and strategies are just tools. What matters is whether you can be disciplined when discipline is uncomfortable, whether you can be patient when everything in you wants to act, whether you can accept losses without letting them shake your confidence, whether you can enjoy wins without letting them make you reckless. These are the real skills that determine success. If I could go back and give my beginner self advice, I'd say focus on process over results. Your first year or two, you're not trying to make money. You're trying to develop a reliable system and the discipline to follow it. Track everything, learn from every mistake, and be honest with yourself about what's working and what isn't. Don't compare yourself to other traders or to some imaginary standard of where you should be. Just focus on being slightly better today than you were yesterday. I'd also tell myself to start smaller and go slower. There's no rush. The markets will still be here next month and next year. Taking time to really understand what you're doing isn't a waste. It's the foundation everything else is built on. And I'd emphasize that losing trades and losing periods are part of trading. They're not failures. They're just the cost of doing business. What matters is that your wins are bigger than your losses over time, and that you're managing risk in a way that keeps you in the game. The journey isn't over. I'm still learning, still refining my approach, still making occasional mistakes. But I'm profitable consistently now, and more importantly, I understand why. I have a process I trust and the discipline to follow it. The emotional swings are much less intense because I know that any single trade doesn't matter that much. What matters is executing my strategy properly over hundreds of trades. That's where the edge shows up. That's where the results come from. Everything I went through, all the mistakes and frustrations and small victories, they were necessary steps in developing that understanding. And I wouldn't change any of it.